One of the questions I see most often surrounding AMC stock is, can the hedge funds hold out until 2022? Is this short squeeze something that's going to happen, in the next month? Or is it something that could drag on forever and we could just be playing a waiting game, us versus the hedge funds? So the short answer is yes, absolutely. The hedge funds could hold out until 2022. There's no date that they have to cover their short positions by. But the long answer, and we'll get into it a little bit in this video, is I don't know if they're definitely underestimating who they're dealing with here, right? The movement in the community surrounding AMC stock, the people who are willing to buy and hold shares of AMC stock are a force to be reckoned with. Okay, so let's go over a little bit about what we can expect timeline-wise. We'll briefly just discuss what's going on with this whole short squeeze movement. And guys, of course, if this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't subscribed to the channel yet, make sure to click that subscribe button. Join us. Become a bro. We're here every single day, and we're growing our portfolios together. All right, guys. Timeline. What's happening here? Can the hedge funds hold out? We know that they can't hold out, okay? When it comes to a short squeeze, let's briefly discuss what it means to short a stock and what this whole short squeeze movement is. So the hedge funds, the institutional investors, they sold AMC stock with the obligation to buy it back later. Now they're hoping that they can buy it back at a price lower than where they sold it. So they brought in money from selling shares of AMC stock, but now they're obligated to cover those shares, and they want to cover them at a lower price. Now retail investors, the people who are buying and holding AMC stock right now, know that they're obligated, these hedge funds are obligated to buy these shares back. Now, it gets a little tricky because there is no expiration date. They do not have to buy these shares back at any given date in the future. It's not like an options contract with an expiration date and it says, on date X, the shares are going to be covered. No, it's not like that. What can happen here is it can turn into a waiting game. And if they analyze the risk surrounding their short positions and they say, we don't have anything to worry about here. We'll just sit on these positions until the share price goes down. They're not going to cover those shorts. Now, if they say, okay, if things start to get a little risky for them, and they say, guys, if we don't cover our shares right now, we stand to lose a lot of money. And then as the price creeps up a little bit, okay, the price is moving a little higher, maybe it'll dip back down, but so it's a game of risk analysis, okay? It's us versus them. The more risk we can put on their plate, the more likely we are to cover or to cause a short squeeze. So let's talk about a couple things that are going to affect this short squeeze and whether or not we could actually trigger the short squeeze in 2021 or if this is going to be a holdout game and we're just going to be playing, back and forth with them forever. So knowing that it's a game of risk analysis, what do we need to do? We need to create as much risk for them as possible. How do we do this? We drive the price higher and we drive the volume lower. This is going to cause the hedge funds to be in a very risky place. Look, if they're digging themselves in a hole, which they've already done, right? They've dug themselves in a 73 million share hole. You can use a billion shares if you want to add up all the synthetics and stuff like that, but I'm using 73 that's being reported. They've dug themselves in a $73 million hole. Now, every time the price rises, they owe more money. They are obligated to buy that share back at a higher price. So the hole gets deeper. The hole gets deeper. Every time the volume goes lower, what does that mean? That means when volume goes lower, that means less shares are being traded. Less shares trade hands as the volume goes lower, and therefore less shares are available to cover those short positions. And that means with the 73 million shares being traded, daily volume's trending around 20 to 40 million shares per day right now. You can look at the 3-month average, but I don't think that's necessarily too good of an indicator because a lot has changed in the last 3 months, right? So it's about 20 to 40 million shares being traded right now. So using that, let's just say 30, they have about 2.5 days to cover their short positions. At 2.5 days to cover, they're not worried, okay? But once they get over, and a lot of the research that I've done says once they get over 8 days to cover, they will be worried. Now, picture this. Price goes higher, they're digging that hole deeper. The longer it takes to cover those shares, they're digging that hole deeper. It's putting them in a riskier situation. Now they will know. Some people might be skeptical and say, well, they can just hold out forever. They can let that unrealized loss go to infinity and they just won't cover the shares. That's not the case, okay? There's so many factors that go into it. The banks that have money involved with the hedge funds, the lenders that have money involved, the brokers. It could collapse everything if they let that loss go to an unrealized infinity, right? That's not going to be the case. So don't worry about all of the theory and all of the conspiracy around there surrounding that. It's not going to happen. They will cover their shares at a certain time. Now, hopefully, when they cover those shares, it's going to trigger a short squeeze. Now, I'll get to it in a second why I said hopefully. But so as they dig themselves deeper in that hole, risk rises. The lenders, the banks, the brokers out there are going to say, guys, you have to cover your positions now. You have to go out. We can't stand the risk anymore. You guys might be okay. The hedge funds might be okay taking on that risk, but we can't handle it anymore. Margin call happens. Boom. They got to come in. They have to cover those 70 million shares. Now, here's where it gets beautiful. Because if there's not 70 million shares being traded, let's say daily volume gets down to 7 million, right? They can only cover 7 million shares a day. And if volume doesn't skyrocket during the short squeeze, the price will, okay? Because they know that they have to go out and offer more and higher and higher and higher prices until people are finally willing to take that price and make that trade. Now, that's the beauty of a short squeeze, because them going back, the hedge funds going back and covering those short positions are what causes that price to rise exponentially, okay? Now, if you're used to value investing and you're used to seeing a price maybe a stock maybe double in price because it had a great earnings report, or because they're doing very well on revenue, or they've got a nice bottom line, this is a whole different beast, okay? The price during a short squeeze is completely dependent on the technical movement of the price, of the risk analysis. It's completely detached from fundamentals, and it can shoot up faster and higher and harder and stronger than anybody can imagine, which is where all the excitement comes from, right? Nobody can put a cap on it. It's going to be completely dependent on when people are willing to take their profits. That's the beauty. It's completely, people say, well, how can AMC have a market cap of $1 trillion? Well, because the market cap isn't dependent on fundamentals. It's detached from fundamentals, okay? It's not to say that AMC is actually worth $1 trillion. We're saying that that's what the hedge funds are having to pay to cover these short positions, okay? So it's a battle between what will be realistic and what is possible, because what is possible is to infinity and beyond. Get Buzz Lightyear involved. Anything is possible here, but what's realistic is when people start seeing that money going into their accounts, they start seeing, $1,000, $10,000, $100,000 in their brokerage accounts, people are going to be tempted to take it. You know that, I know that, and that's what's going to cap this short squeeze, okay, is how tempted people are to take their profits. So here's what I don't want to see happen. We'll wrap this up right here. I don't want to see the hedge funds have any sort of hope or any sort of light at the end of the tunnel, okay? Now, I do believe that this vote for newly issued shares coming up on May 4th could absolutely give them a light at the end of the tunnel. If they know that they could see, new issued shares flow into the market, new supply entering the market, that's really going to lessen their risk. I mean, think about it, guys. Remember back to when you were a kid, you're driving through a tunnel, or you're going across a bridge, and, you try to hold your breath when you go into the tunnel, right? You hold your breath and you try to make it to the end of the tunnel. Well, the tunnel is going to end, right? And if you're getting close and you can see that light, you can say, okay, I can make it, I can make it, I can make it. And that's exactly what they're looking at here. If they know that they can make it through this short squeeze, if they know that there's any inkling of hope on the other side, and all they have to do is outlast us, they've got a lot of money, okay? They've got a lot of time. Technically it's not their money. Hedge funds are investing money for other people, right? So they can sit on it. They can wait. They don't want to lose it, but what do they really have to gain by making more money either? They know they've put themselves in a hole. They just want to get out of the hole at this point. So what I'm saying is don't give them any hope, any possibility of getting out of this squeeze. Guys, I want to squeeze AMC stock to the moon. Is funny, right? But I want to squeeze every little piece out of AMC stock. I hope that you do too. And listen, I'm not trying to sway your vote in any way. Do what you believe is right, absolutely. But just know that this is a game of risk analysis, and I don't want to give them any chance to lower their risk. Now, guys, if you're brand new to investing, if you don't have any AMC yet, use the link in the description below for Webull. Maybe you're investing on a different platform right now. Sign up for Webull, deposit $100, get a couple free stocks, sell those stocks, and buy a share of AMC, okay? Get involved with the short squeeze that way if you have to, but you don't want to invest any of your own money or you don't have any money left to invest. That's one way that you could definitely do so without, doing anything out of pocket. So use that link in the description below for Webull. Guys, if you're in 11 minutes in and the subscribe button is still red, subscribe to this channel. We're here every single day. Become a bro. We're here growing our portfolios together and having a great time and learning so much along the way. Share this video with somebody who needs to know what's going on with AMC stock. Share it and tag me at Claybro or Claybro883 if you post it anywhere on social media. I would love to follow you guys back and really just see what everybody's interested in investing in. Now, until the next time, I hope that each and every one of you have an awesome day.